Uganda's economy is expected to grow at a rate of 6% per annum, following the improvement in growth performance in the financial year 2013-2014 at 4.5% in real terms. Unfortunately, Uganda has very big development projects, including the construction of Karuma Power Station, the oil pipeline, the 2016 general elections, and the standard gauge railway, which continues to evoke mixed feelings from government entities.
Which means insurance companies will be able to insure loans to agricultural projects, again hoping to bring down the interest rates.
Secretary to the Treasury Keith Muhakanizi refutes observations of the Central Bank Governor Tumusiime Mutebile, objecting to the printing of more money for the 2016 presidential polls following the 2011 polls, in which the country suffered the worst inflation rates in the region at 36%, which was as a result of printing more money for the 2011 polls. To Muhakanizi, government will not spend outside the approved budget by Parliament.
All of you have been speculating that there is election. That's what you have been writing. Is at this stage utter rubbish that we are going to borrow money. We are giving you this information to understand that we are in charge.
Though this may be the case, Central Bank Governor Emmanuel Tumusiime Mutebile is quick at pointing out weaknesses surrounding the performance of the Ugandan shilling compared to the other regional currencies. He doesn't rule out the volatile economy the country finds itself in.
Core inflation rate has fallen during 2014, but it is forecast to edge to around 5% over the next 12 months. Largely because of exchange rate depreciation, which has occurred in 2014 and early 2015, well, this month.
Mutebile warns government against financial indiscipline, which he thinks is at the center of the financial mess facing the country. As to whether government will heed to his call or not, he remains asking government to trade carefully or risk plunging the country into astronomical debts.
What we are saying is that the standard gauge railway is a priority and should be implemented. We all agree that it should be implemented in such a way that it does not cause debt and sustainability.
The fiscal program is consistent with ensuring that public debt remains sustainable and that domestic borrowing will remain within the levels which will not threaten to crowd out private sector borrowing.
Apparently, Uganda's foreign debt stands at $23 billion, which is equivalent to 35 trillion shillings. The domestic debt is at $20 billion, while money in circulation in Uganda is 68 trillion shillings. This as the Ministry of Finance released Uganda's half-year fiscal performance, which shows that tax collection increased in revenue, amounting to 4.56 trillion against a target of 4.54 trillion, thereby exceeding the target by 24.3 billion during this first half of the financial year 2014-2015.